Good evening. Dear colleagues, as always, Dan Strelkov here as always for the ForexTimes project. And indeed, as always, let's consider the probable movement of trading instruments for the upcoming trading week. Dear colleagues, I think I've already mentioned, and I'll repeat again, please come to the community ForexTimes, and you will always know where the strongest levels and ranges of support and resistance are. Namely, decisions to enter the market should be made based on these levels, not just when the price is, for example, between them or has not yet reached them. Making decisions, no, we use data from the Chicago Mercantile Exchange. Namely, we observe the expectations of professional market participants and what they do at certain levels. Therefore, the strongest range and the strongest levels of support, resistance. If you come to the Community ForexTimes, you will always know. Well, let's go. As always, euro dollar. And for euro dollar, according to the data from the US Commodity Futures Trading Commission, we see an increase in buyers by 3%. This tells us that the trend is still upward, and we have an increase in buyers by 3% along the trend. Therefore, dear colleagues, we will probably buy, but we will only buy from one of the strongest levels, and this is the market maker's loss level. This is the lower boundary of the market maker's range. At the time of expiration, if the price remains within this range, the market maker will profit from all option contracts at the time of expiration. But if the price goes beyond this range at the time of expiration, the market maker will incur a loss. The market maker is the largest financial organizations that provide liquidity in the futures market on the Chicago Mercantile Exchange. Therefore, these organizations can influence the price in a certain way so that the price returns to this range before the expiration. So, if on Monday, Tuesday, or Wednesday, in the first half of Wednesday, the price drops to the market maker's loss level and works off 132 million put option contracts, we will consider entering the market for buying at the level, or let's say the support range of 10728 to 10740. This support range is the strongest support range for the upcoming trading week. So once again, dear colleagues, if the price on Monday, Tuesday, or in the first half of Wednesday drops to this support range, we will consider buying. If the price sharply goes up on Monday, well then, as they say, let it fly. In that case, we will consider selling from the RO level and the premium levels. These are the levels where professional participants of the Chicago Mercantile Exchange are likely to open futures contracts for sale with maximum volumes. This may trigger a decrease in the trading instrument, but you will learn about this during the trading week as I will be closely monitoring it. So, dear colleagues, despite the sharp rise in gold according to the data from the Commodity Futures Trading Commission, we see a slight decrease in buyers and a 2% decrease in the capitalization of the trading instrument. Therefore, let's assume with you that the price has exited the triangle. The entry into the triangle was through the initial diagonal. Further, the triangle ABCD is wave B, and now the price is in wave C. Moreover, we are well aware that the triangle is the penultimate wave. Therefore, wave C is the last wave. At the moment, the price is already in the strongest resistance range. So, dear colleagues, we are considering a correctional decline down to the level of 2060. At this level, there is a strong support level, namely the weekly balance. Here we have the market maker's range, and the price has now come very close to its upper boundary. The weekly balance is the level where during the expiration of weekly option contracts, the market maker will gain maximum profit. Therefore, during the week, we expect a corrective decline to the level of 2060. And today, let's consider natural gas together. Why did it catch my interest? For a simple reason. We have two quite obvious support levels from which I will consider entering the market for purchase. The first level is 1.5 and the second level is 1.25. Our target levels are already known. Professionals have shown us with open option contracts which levels they are. Level 2.25 is our first target. How will I operate? Currently, we likely see a corrective growth after the correction. When the price approaches the level of 1.5, I will enter the market with a stop loss of 250 points. If the price starts to rise, I will enter the market with a risk of 1% of the trading account balance. If the price continues to rise, I anticipate making approximately a 3% profit within the month with this trading instrument. However, if the price falls to the level of 1.225, I will incur a loss of 1%. Then I will re-enter the market with a 1% risk for a purchase, but this time with a stop loss of 150 points. In this way, if the price rises to the target of 2.25 after reaching 1.225, I will have earned just over 5%. This is how I will operate with this trading instrument, and I wish you the same, dear colleagues. Once again, I remind you to come to the community Forex Times. By looking at least at 10 trading instruments, you will see the strongest levels and the strongest ranges of support and resistance. Using any strategy you like, you can independently enter the market. Thank you very much, dear colleagues. This was Strelkov from the Forex Times project, and for today, goodbye.